Have you ever wondered what an option is in the financial world? Well, it's time to unravel the mystery. Picture an option as a financial contract, like a special agreement based on the value of something else, which we call underlying securities. These could be stocks, indexes, or exchange-traded funds. In the simplest terms, an options contract gives the buyer the chance to buy or sell the underlying asset, depending on the type of contract they hold. But here's the twist. Unlike with futures, the holder isn't obligated to buy or sell the asset if they choose not to. Each options contract comes with an expiration date, a deadline by which the holder must exercise their option. The price stated on an option is known as the strike price. And how do you buy or sell options? Typically, this is done through online or retail brokers. Now, options are versatile creatures in the financial jungle. They involve a buyer and a seller, with the buyer paying a premium for the rights granted by the contract. There are two main types of options: call options and put options. Call options allow the holder to buy the asset at a stated price within a certain time frame. On the flip side, put options enable the holder to sell the asset at a stated price within a specific time frame. So, if we're talking about call options, we're looking at a bullish buyer and a bearish seller. Put options, however, involve a bearish buyer and a bullish seller. Traders and investors play the options game for a variety of reasons. Some engage in options speculation, which allows a trader to hold a leveraged position in an asset at a lower cost than buying shares of the asset. Others use options to hedge or reduce the risk exposure of their portfolios. In some cases, the option holder can generate income when they buy call options or become an options writer. And if you've ever wanted to invest in oil, options provide one of the most direct routes. For those dealing with options, two key numbers to keep an eye on are an option's daily trading volume and open interest. These can help you make the most informed investment decisions. Lastly, it's important to note the difference between American and European options. American options can be exercised any time before the expiration date of the option, while European options can only be exercised on the expiration date or the exercise date. Exercising in this context means using the right to buy or sell the underlying security. So there you have it. Options are not as daunting as they may seem. They're simply contracts offering the opportunity to buy or sell an asset, with a versatility that makes them a valuable tool in the financial world.